Let's invite the Group CEO of Puravankara, the real estate company. Abhishek Kapoor is now here with us on Midcap Radar. Abhishek, afternoon, and thanks so much for joining in. Property prices had already started rising as builders were passing on the increased cost burden. Now EMI and interest cost burden is likely to surge with the Reserve Bank of India further hiking rates by 50 basis points. Do you get a sense that growth is going to slow down from here on?
Firstly, thank you so much for having me on the show. I believe that real estate is an asset class which is not really bought for the short term. And all the demand that has been there, which has been pent up for now quite a few years, is pretty much back in the market. What we see on the ground today is that salaries are going up, job opportunities have increased, and because of that, this marginal increase in interest may not have any impact on the demand. The other thing that has also happened is, a lot of consolidation has happened. So obviously, because of that, large amount of demand and capital is getting concentrated within a few large branded players. So from the where we look at as a business in real estate as well as for the brand, we don't see any significant impact as far as the demand is concerned due to this hike.
Okay. Abhishek, good afternoon. Since you're not seeing any impact on demand because of the move that RBI took today, what kind of growth are you anticipating in FY23? Because FY22 saw record high sales for Puravankara. You expect that to continue because that was almost a growth of around 3% as far as area sold is concerned, and value was up around 9%. Is that a growth rate you can continue in FY23 as well?
Yes, definitely. So let me just break that down for you. If you look at the 9% and 3% number, most of it, in fact, more than 50% growth we achieved in under construction and new launches, because our ready to move in inventory sales came down by 67%. What it means is essentially for us is that we are able to now launch a lot more projects and are able to monetize our equity investments into the 44 million square foot that we already own. So that's the big shift, to look at more than 50% growth in last year in under construction and new launches. And we see that trend will definitely continue. This year, we have plans to launch 16 million square foot, which is between Puravankara, Provident and Purva land. So we definitely see that we should continue to sustain the kind of growth we have worked on the last year as well.
Okay, 16 million square feet is the volume guidance for FY23. Abhishek, just to get back to that point, you're saying that right now this rate hike, this increase in borrowing cost is not going to impact volumes because there is pent-up demand. There was a statement by Anuj Puri of Anurok, and he said a rate hike was inevitable, but we are now entering the red zone. Any further hikes will reflect markedly on housing sales. So he's clearly worried that the rate hike cycle doesn't end at what happened today. We are going to see further rate hikes and demand will slow down. Your thoughts?
So I think, I'm not completely disagreeing with what Anuj has to say, and we have to look at both the business per se and the brand and the strategy that the organization may have to mitigate this risk. So the way one is as an industry to answer that question, I still believe I kind of disagree on how much will be the impact of this increase in interest rate, because real estate as an asset class is a very good real investment, and we believe that consumers are pretty much back in the decision-making mode. But yes, as an organization, even if that risk to some extent does come out, and there's always a risk in the business, then as an organization, what's your strategy? So you have multiple types of asset classes. You're dispersed over 9 cities, which means you are not saturating any one market. You have multiple opportunities to invest and also to launch, and because of your diversified portfolio in geography as well as asset class. So that gives us a distinct advantage as an organization to mitigate any risk. The other thing that is an advantage with the organization is that we own these assets. These are investments which have been made over the years. So, this is our equity which is already deployed in the land. These are not new investments. These are not new land prices. So for us to go to the market, it still is really not going to make a significant impact to us. As long as we are continuing to do the launches and sell, monetize our investment, we'll do fine. But again, to come back as an industry, I don't see that kind of an impact unless, it's a significant, if you see a 200, 300 bips increase from RBI, then maybe then that's a different conversation. But I don't see that kind because, in next 2 years, it's very important for the economy to continue to grow as well.
Okay, so you are not concerned about the current rate of interest rate hikes that the RBI is undertaking. So let's talk about business now, Abhishek. You did tell us the last time that there have been a price increase of 8 to 15% across the unsold inventory. You also plan to take more price hikes because there has been a margin hit because of higher raw material prices. Government did take some steps to cool down the cement and steel prices. Considering all that and the EMI prices going up, what is the kind of price hike that you're looking at in FY23?
As we spoke, and you're right, I mentioned there'll be a price increase, and the price increase has already happened. In fact, this quarter, the price increase we took in the month of April itself. Here on, I think we are also going to be waiting and watching on how the market behaves. But from asset to asset, from market to market, the demand, supply, and the stage of construction matters. So that decides whether we want to increase prices in certain projects or certain projects we don't want to increase prices. So we will take a more strategic call basis on how we see the market evolve and the demand evolve. Having said that, a lot of our new launches are coming at new prices. So that really doesn't, normally at launch, you have a good price point to buy at, and then prices slowly, gradually go up as the project progresses and, the completion happens. So we're seeing that will continue. In that sense, the price increase will happen because all the new launches, as the launch gets completed and, we sell most of our inventory, the prices start going up as the construction progresses.
Abhishek, out of time. Would have loved to chat some more. Thank you very much.